this message finds you well. Rich Krafcik coming to you from Cobblestone Asset Management, and I want to use this opportunity to speak about something that we're keeping a very close eye on, the yield curve. I'll first show you what it is, and then we'll tell you why it's got our attention. So if you look on your screen, there's a blue and a red line. That blue line is a normal yield curve. It slopes upward and to the right, and the reason is, as you lend or borrow money for a longer period of time, we'd expect there to be a higher interest rate attached to that. If you're going to give money to a friend and it was for 1 month, you would demand one rate of return. If they came back and said, we'd like to borrow this money for 5 years, I would hope that you're going to ask for a higher interest rate. It's a longer period of time. Now look at the red line. The red line is inverted. It's actually cheaper to borrow money for a longer period of time than a shorter period. This gives us some interesting insight into what could lie ahead. I shot a video in November where we talked about some of the inflationary data we were seeing, and I stated that I expected the Fed to take some action to combat inflation. That's exactly what has happened. Now I want to show you the yield curve and tell you why we're talking about it today. You're looking at the spread between the 10-year Treasury and the 2-year Treasury. That means the interest rate on the 10-year minus the interest rate on the 2-year. In a healthy environment, we expect this spread to be positive. The line should be above zero. Now, on this chart, which goes back to pre-1980, the recessions are indicated with gray vertical bars. Notice that anytime we've seen an inversion, there has been a recession to follow. Now, that has ranged from as quick as 6 months later to as long as 19 months later over that time frame. So what we're spending our time on now is watching other economic data and trying to figure out whether this recession is relatively sooner or further down the line. But we do believe, based on the data we're seeing, that there's one coming. Now, some of you watching this video probably really enjoyed charts, others not so much. I can't help myself, so I have to show you one more. Here's something we're watching to see, is this recession going to be sooner or later? And to keep this explanation brief, we've got this chart split by geography. Green indicates growth, red indicates contraction or a possible slowdown. This is a leading indicator, so that means it tells us where the economy is likely heading. Very important in this particular time frame. If you want to get into more detail in that, reach out to someone on our team. We're happy to dive into this chart in a lot more detail, but if I shoot that on a video, you're all closing it right now. So just realize that because we're getting a lot of green data, it tells us that we probably have a bit more runway to try and make some money in our portfolios and to try and capture some growth that keeps us ahead of inflation before the recession may come. So while it's on the horizon, we're by no means fearful, we're just aware, and we're adjusting accordingly within our portfolios.